In this presentation, we're going to record a customer deposit with the use and help of bank feeds. In other words, we're going to see a deposit coming into our checking account with the help of the bank feeds. We're going to include that deposit into our financial statements. We're going to start accounting with Sage Business Cloud Accounting. Here we are in our Get Great Guitars business summary page within Sage. We're going to be opening up our financials, going over to the reports on the drop down in the ribbon, opening up that balance sheet. And once that's open, we're going to duplicate the tab by hovering over that tab, right-clicking on it, and duplicating it. And then we're going to go back to the tab to the left. We're going to do the same thing for the P&L, otherwise known as the profit and loss or income statement. We're going to be opening that one up, the profit and loss. Once open, we'll do that duplication thing again by mousing over the tab up the top, right-clicking on it, and duplicating that tab. I like to check the dates, even though I think the dates will be okay. We want to be in 2020 here, so that looks good on the balance sheet, and that looks good on the income statement. So we are good to go. Let's go back to the first tab where we're going to actually do stuff, and then we're going to go to the banking in the ribbon. You want to be on the banking section within the ribbon where we're going to be dealing with those bank feeds. We only have 4 of them left here. We've been whittling away at the bank feeds. These are all the bank feeds. Only 4 are left in limbo over here, the Sage bank feed limbo. And we're going to bring these 4 on over into our financial statements. So we're going to then scroll down. Now, we're on the deposit side of things, and we're going to be looking at the deposits at this point. So just to recap on the deposits, let's think about the deposit side of things on a cash basis system. So if I go back over to our flow chart, we're in QuickBooks, but we're just looking at the flow chart. I'm just looking at the desktop flow chart because they got a nice flow chart here. So we got the flow chart on the deposit side of things. We're hoping most of the deposits come from the customers. So remember, if you're in the type of accounting system where you can be on a cash basis, or it works well for a cash basis, or the type of system that does work well for a cash basis is if you're waiting for it to clear on the bank feeds, and everything that clears on the bank feeds is basically income, and unless there's some other exception to it. So, and that would be a business like if you're in e-services or something like that. If you got money from like an AdSense or YouTube revenue, or AdSense revenue from blogs or something like that, or if you got revenue from Amazon or affiliate marketing and they just pay you as you go, and once it comes through your account, you're saying, okay, there it is, it's income when we get it, then that's going to be fairly straightforward, and you could just basically say everything is going to be income once it goes through the bank feeds, and I see it as income as a deposit into the bank that I'll just record the other side as income. The only exception then you need under that method is to know when you have a deposit that is not income. And we'll show a couple deposits that will not be the main kind of deposit that wouldn't be income. Would be either you put money in as the owner, right? If you put money in as the owner, then it's not a deposit. And you can usually recognize that by looking at the type of, it's going to be an even dollar amount and whatnot. So you'll be able to distinguish that. Or if there's like a loan, the deposit went into the books because it's a loan from the bank. And again, it'd be pretty easy to distinguish usually because it'd be an even dollar amount for the loan that went into the account. So that would be fairly straightforward. That would be the most straightforward type of thing. However, if you're in a type of industry where you have to invoice people, like a law firm or a bookkeeping firm or landscaping or something, possibly you do the work, possibly you add up the hours that someone spent doing the work and then email and then, invoicing a customer for it. Under those circumstances, then you got to think, okay, now I'm going to have to do this invoice, which is going to be a non-cash basis thing. It's going to be increase in the receivable, and the other side is going to be going to income at that point. So if you have to invoice then you're thinking, okay, I got to invoice, and then later on the bank feeds are going to come through, and I'm going to have to connect the invoice to the bank feed. So you could invoice and then wait till the deposit, the money that gets paid at a later point, clears the bank, and then try to connect them to the invoice. That's one way you could do it. Now, and the other way you can do it is take the invoice, and then when you receive the payment, you record the receipt of the payment, make the deposit into the bank. Then when the bank feed comes through, you're simply matching the bank feed, the money that you got on the bank feed, to what you already recorded. So you're tracking the full scale of the receivable in that case, which might be good. If you're dependent on the receivables, it's nice to have a good handle on who's owes you money and whatnot. So or maybe you're in a store and you're thinking about a store and you're getting sales receipts. We're making sales in the store, like we're selling the guitars in the store, or if it's like a massage store or services that you have a service thing that you sell at that point in time and you get paid at the same point in time, then you may get money during the day, and the question is, once you get the obviously once you have the money, it might be cash, or something like that. You're going to group it together, then deposit it into the bank. And when you deposit it into the bank, you want it to show up in your books in the same kind of format as it shows up in the banks, so that you can match them out. You can match the deposits out. So in that case, you might use some method by taking the deposits, put them into like a clearing account or something like that, another cash account, and then making one deposit into the bank, so that the deposit in the bank will match up what you see in the bank feeds. In other words, you got to think about how you're going to group the deposits together so you can see what's going to happen on the bank side of things. They need to basically match. You'd like to basically match the sales you made on the day, the cash that you have with the deposit, to the bank. And to do that, you might actually make the deposit in the bank and again use the matching type of system. So we'll take a look at those deviations in the second month. In the first month, we're gonna do the more cash basis system. So we'll just make the deposit, record it as sales. Also note that if you have inventory, this muddies up the system as well, right? Because now you got the inventory on a perpetual system. If I was tracking inventory through Sage, which you can do, they can allow you to do that, then every time I make a create sales receipt or an invoice, it would be decreasing the inventory and recording the cost of goods sold as we go. That would be a perpetual system. That would be a little, so we'd have to track the inventory through the system. Now, we're not going to do that in our system. What we're going to say is I'm going to be more on a periodic system. And that means in the first month, we even went to a cash basis system, which basically means that when we bought the inventory, we've already expensed it. We expensed it at the point of purchasing it on the cash basis system. And that means we don't need to record the decrease in the inventory and the cost of goods sold at the point in time we make the invoice or even make an adjusting entry. So that means on the cash side of things, it's going to be easier when we get the money. We don't have to deal with inventory like we would on a perpetual system, because we can think of ourselves on a periodic system, or in this case, on a cash-based system. So we'll be on a cash-based system where we already recorded the cost of goods sold, if it was inventory related to, we did that when we purchased it. In the second month, we'll use a periodic system, and we'll put it on the books and show you and talk about how you could adjust it as you go. Okay, so that means we're on a cash basis system. So we're going to say that anything that is from a customer, which we're assuming every deposit is, as opposed to, unless it's the deposit that looks obviously not from a customer, such as these two, which we're going to say are from loans or ourselves. And they're clearly not, because you can see they're an even dollar amount and a fairly large dollar amount. These two we're going to say then are from customers. And again, I'm not going to get into anything on the invoicing or anything like that. I'm just going to say, hey, look, anything that comes through that's from a customer, we're going to assume is income, and we're just going to simply put that to an income account. Note also that if you're dealing with bank feeds from something like an AdSense revenue or something like that, where they pay you electronically, then you'll have reference information oftentimes, and you can actually use that to reference who you got paid from and possibly allocate that to different types of income accounts, and that'll work great for you. However, if you're simply putting the deposits into the bank, if you're grouping the money together and putting the deposit into the bank, then you may have no reference, right? There might not be we don't know who the customer is or anything by the time it clears the bank, unless it was kind of an electronic transfer. So in that case, then all we have is the raw data of the deposit. So note that in that case, if we're using the bank feeds and we don't have the information in the reference from the deposit information, we don't know that we can't really track the customers as easily, right? We don't have that information. All we're going to do is track and say, hey, it was income. I know it's income. I'm going to put it in as income. So that may be a problem or may not. If you have a lot of sales to smaller customers and you don't need to track the customer data, then maybe that's not a problem. If you're really reliant on particular customers and you need repeat sales on the same customers, then you may want that data, of course, to note who your best customers are. It just depends on the industry that you're in. And like if it was an electronic transfer, you can track that information just from the bank feeds. If it's not, then that's something that you could lose by having more of a cash basis system. Okay, so now we're going to record this. I'm not going to put a customer then. I'm going to say this is an electronic transfer, and I'm just going to put this information directly into the revenue account. So I'm looking for basically a revenue account here, and I'm going to put it into the sales of materials And note, I looks like I have kind of a job costing type of system for my general ledger because of the way I set up the general ledger. But I'm gonna say that, imagine we're in kind of like a retail thing item here. So I'm gonna say that's gonna be a sale for basically our inventory items. So this is gonna be, and then I'm also gonna think about, in the U.S. we have to typically pay sales tax on a state level for inventory. So then we'll also, so if it was a service, we don't have the sales tax for the service typically. And so then you wouldn't have to deal with sales tax. If it's inventory, then you also might have to deal with the sales tax issue. And again, if you're on a cash basis system, you might think, well, if I'm just recording the deposit, then how can I calculate my sales tax? So we'll think about that a little bit as well, and how we could work that in. Again, it's if you don't have any, if you're in the U.S. and you're not subject to sales tax because you have a service business, it's also something that you don't have to worry about. We'll just touch on some of those more complex kind of issues related to inventory. So I'm going to record this. What's going to happen? It's going to be increasing the checking account. The other side then go into the income statement for revenue, increasing revenue, and therefore increasing the net income as well. I'm going to save that or create that. And it won't let me push forward without a sales tax line. So I'm going to say there's no sales tax on this item. I'm going to say none. And then I'm going to go create. Then I'm going to do the same thing for this one. I'm going to say that this is going to be, and notice it remembered the account now. It said, hey, all it knows is there's a deposit. It said, hey, you deposited the last one with no reference number, and it was a deposit to sales of materials. Do you want to do the same thing here? We're going to say, yes, we do want to do the same thing here. I'm just thinking if there's a difference between no tax and tax exempt. So I don't think so. I'll keep it on the no tax. I'm going to keep the method, or put the method on down to the electronic, which I should have had last time. So we'll keep that there. Same kind of activity will happen on the financial statement. So let's create this, and then let's go over to our financials and see what happens with it. So we'll go on over to the balance sheet. I'm going to calculate the balance sheet. So we should see cash going up towards, more towards the 0 now, because we're actually recording the deposit side of things. We still need to record the beginning balance, so it's not going to be all the way up yet. I'm going to drill down on it by clicking on the cash accounts, see the activity of it. And there it is. There's our deposits. So those are our 2 deposits. If I was to select it, this is the first time we looked at a deposit side of things. So let's go into it. Notice it put it into this type of form. It doesn't take us back to the bank feeds. It goes into our other revenue type of form. And so here's our other revenue type of form. So then I'm going to go back, and then we'll go back to the balance sheet. So let's go on back to the balance sheet. And then I'm going to go to the P&L, profit and loss, and let's recalculate that one. And we should see some revenue appear, which is encouraging. It's nice to see revenue appearance. So there it is. There's the 21,630. Let's click on that, drill down on it, see the information for it. So there it is. There's our detail. There's our increase there. So I'm going to go on back. Now, in future presentations, we'll take a look at some other deposits that may not be, revenue related, and just distinguishing those, and the 2 main ones being one from a loan and one from us, the owner. So we'll kind of deviate from what normally the deposits would be. The system would typically be, if there's money coming in and you're on a cash basis system, and if there's a deposit, the assumption is that it's from a client, a customer, unless we determine otherwise. We should be able to determine otherwise fairly easily by the the look and feel of the deposit. Is it an even number? How much is the deposit? So that's going to be it for now. Let's get out of here.